Hi guys, welcome to ETF Junction channel. Imagine the streets of Europe in 1890s. You'd see carts, bullock carts, horses, and that is how the entire roads would look like. Come 1920, exactly 30 years later, the entire streets and roads were filled with automobile cars. This is a dramatic and drastic change which took place in a short span of time, all because of invention of one particular product called automobiles, and it changed the entire roads of the entire world forever. This brings us to today's topic of discussion: are ETF gaining popularity in India? If you look at the data, ETF has been able to make a fair amount of presence in the investors' portfolio, though these are very early days for India. If you look at the global market, it has been seeing a phenomenal rise. You'd be surprised to know that passive investing has almost contributed 54% of the total mutual fund portfolio, which means active is lesser by 47%. Now, this is a landmark movement. It crossed 50% in 2018 and it has been gaining ground since then. Come India, and let's see how India is faring. If you look at the data as shared by SEBI, as on March 31st, 2017, the total asset under management under ETF was 52,000 crore. In a period of just 5 years, it has galloped to 4.99 lakh crore. Annualized growth of 57%. It's a staggering growth which we have seen. Even on the number of ETFs or the products extended to the investors, from 84 in 2017 has added up to 228. And if you look at today, almost every day there's a launch of new ETF. It is clearly showing the interest which is coming up, obviously, from the investor community and fraternity. If you look at the reason for the burgeoning growth of this industry, it has been largely on the simplicity of the product. The product structure is such, it's very easy to understand, easy to execute, and which brings it much closer to the investor's interest. The other feature which makes it really attractive is the cost effectiveness. And to just explain this point with an example, if you buy a mutual fund product for 1 crore, you end up paying as an expenses of roughly 1.5 lakhs to 2 lakhs. Vis-a-vis, for the same amount, if you buy an ETF, the price is roughly around 5,000 to 8,000. This is a stark change which is making it huge favorite for investors, and these are early days which we are seeing. The other important aspect is the inherent diversification in the product. It has a range of diversification which is very, very appealing for the masses. Look at the case, if you want to buy a Nifty, which is a reflection of Indian economy, which includes all the sector, you can buy as this one unit of Nifty ETF at as low price as 40 rupees. Now, this is amazing that you are covering the entire industry, entire sectors at a cost of 40 rupees. This makes it a huge affordable investment instrument. Add to this the other feature of convenience. You can buy ETF from stock exchanges during trading hours from either NSE or BSE. It is as simple. Further, if you look at, it is very transparent. At any point in time during the trading hours, you have access to the entire portfolio, unlike mutual fund where you get to see the entire portfolio after a fortnight or at the end of a month. The other feature which it gives you is the range of the product which it has. Indians are used to investing either in equity, debt, or at max gold. Look at the ETFs, the range of commodity product like silver ETF. Other range is large in number. Come other segment which is a forex ETF, crypto ETF. There is a whole host of product range which is coming like no other instruments are providing to you. ETF is also coming up as a real innovations. Now, if you look at the new innovative product which are coming like reverse ETF, it's an order of the day in global market. In India, we should expect it soon. The other product is one product ETF. These are sheer innovations which we are seeing, which is using derivatives, giving comfort to the investor as per their liking. These are early days still in India. I'm sure with regulators' permission, we would see these products in our portfolios soon. The percentage allocation of ETF in Indian mutual fund industry was roughly around 6% in October 19, which has almost reached a 10% allocation, clearly showing a good growth and a good penetration in this segment. When you look at the construct it has, the top 30 cities contributes roughly around 85% of the total composition, and the below 30 contributes roughly around 15%. and largely these have been bought by DIY investors. We clearly feel when the times are coming ahead, we will see much more growth and bigger robustness in the ETF growth. Thanks for watching this video. Hope you really enjoyed watching this. Please like, share and subscribe for similar videos in future from ETF Junction channel.